If you're an active trader who uses a daily loss limit and a profit target, where you stop or get your daily loss limit and you stop or get your profit target, then you may want to stick around and watch this video, this YouTube video, into its entirety, because I think the implications are going to be pretty, maybe surprising, the mathematical implications in terms of what it says about your probability of profit. And choosing the wrong ratio could really make it such that could really limit the probability of you being of a trader being profitable, mathematically speaking. Hi, I'm Curtis from Beyond Backtesting, and this is a spreadsheet I've developed that looks at various size daily loss limits with profit objectives and win ratios. And what it says, what we'll find out is it suggests to me there is an optimal range where your loss limit, your average losing day, or your daily loss limit should be set, and your winning day should be set. There is an optimal ratio for that, mathematically speaking, based on what I'm looking at here. Before we get started, though, let's say trading is risky. Futures trading is risky. Don't trade with money you cannot afford to lose. And this is hypothetical. Obviously, it should be obvious this is hypothetical. Should not be considered as investment advice. It's just obviously one factor. It's just looking at it in a pure mathematical way. But let's, with that disclaimer out of the way, let's look at what happens. I want you to focus on this yellow zone in this highlighted region. And what we're looking at here is what happens if you choose a certain size loss limit and a certain size profit objective. And I know from talking to traders and my own experience that many traders use 2 to 3 times their loss limit in relation to their profit target. And this spreadsheet, this calculator is saying that is not the thing to do, that you're really going to make it hard on yourself with that, and unless you're able to achieve a super high rate of consistency. So let's look at this to see what I'm talking about. There's a lot going on here, and so let's just focus on this yellow highlighted region. So here we're looking at a trader who has a profit objective of $300. They have a stop loss or daily loss limit $900, and they're going to trade until they hit their profit target or until they hit their loss limit. And we're going to so what we're looking at here is how much they make given a certain percent of winning days. So here, they win 80% of the days, and at the end of the month, they made $1,200. Now, 80% winning days is probably obtainable for some traders. You may make do better even, but you can see that's a very high consistency. Return is not that great if you look at, in terms of return, they're profitable. But what happens? I mean, that's fine. You're profitable. What happens if you drop, if your win ratio drops to 7%? If you're trading with this type of a loss limit, this is the profit target at the end of the month. You had 14 winning days, 6 losing days. I would call that still pretty consistent. If you look at consistency, that's still pretty consistent. And you're down on the end of the month, not $1,200. So what this tells us, if you're one of these traders who trades with this type of a loss limit to your win ratio, you've got to be hitting some pretty astronomical consistency levels. Some really high consistency levels to be profitable, and even to make like really good money, you're gonna have to be hitting like 80% north. And what we're trying to do here is say what would happen if your performance drops off if you're trading this way. What happens, because we can target an 80% win ratio. We might hit it some months, but what happens the months we don't? And this is looking pretty ugly, because if your win ratio drops to 60%, now you're losing $3,600 on the month, which is not good at all. Now, what happens? Obviously, you may say, "Well, that 3 times, that's obvious. I don't use 3 times. I use 2 times." Okay. Well, let's drop it to 2 times. So now your average win day, you're stopping when you hit 300, and you're stopping when you're down 600. With a 60% win ratio, you're still losing $1,200 on the month. Okay. Now, obviously, if you get 70%, even when you get 70% win ratio, you're only making $600 on the month, which is like 1 losing day, and you're going to be negative. So if you're trading with this type of a risk reward, and you're struggling, this mathematics is not favorable to that. And I've done this in the past, and this is saying, wait, this mathematics is not favorable. It's basically saying you're trading against the math. You're really trading against the math when you only make $600. You're talking about consistency. How much? Obviously, some traders, rarely have a losing day, but unless you're one of those traders who almost never has a losing day, this type of ratio is not going to work for you, right? You have to really hit 80% to even hit a good return. Okay, so now we're going to drop down to say 1.5%, right? And what we see here is that at 1.5. Now, obviously, at 1.1, let's just back up. If your winning day and your stop loss are equal at 60% win ratio, you do make $1,200. But for those who actively trade, it's going to be hard to. For many of us, it's going to be hard to hit a $300 gain if our loss limit is equal. It's going to be hard. You're going to be much more likely to hit that stop loss first than if you have a little more room. But if you do achieve a mediocre consistency with 1-to-1, you're making $1,200. But we probably want a little bigger risk, and we can have that will increase our probabilities for many of us. It gives a little more room, right? So if we go 1.5, we're break even at 60%. So that's not so bad. Your consistency was pretty mediocre. You do have $450 of risk, and you're only trying to make $300, so you do have more risk. Then you got some more room to play with than what you're trying to hit. And if you do just hit this mediocre, you haven't lost anything. You're at this consistency level, you're basically flat. And if you do manage to hit a good consistency at 10%, you're up $1,500, right? You make $1,500, which is that's fair. It's still 3 times your loss. It's over 3 times right at 3 times your loss limit. So that's pretty good, right? And you also put it in terms of your winning days. It's like a week, right? So that's not bad. All right, that's not bad. 1.5 is not bad. 1.3 is pretty good too. If you drop it to 1.3, you're a little tighter. So you're targeting basically 300. You're risking 400 to make 300. If you get that 60%, what's nice about this one is you actually, with just this mediocre consistency, you do actually manage to put up a profitable month. I like that. 1.7, if you need a little more risk, okay, that gives you a 300 and target and a $500 loss limit. You will be losing at this ratio. You need to get to the higher percent win ratio, but you don't lose a lot. You didn't lose in very much. You only lost one, and again, this is pretty mediocre consistency. If you get that 70% winning days, you're going to be profitable in a month. What this suggests to me is that the optimal range, if your risk is going to be more than if your risk, this is what it's saying to me. Of course, this is my opinion, but it's telling me that if your risk is if you're going to be risking more than your objective, then the optimal risk to your stop loss or daily loss limit to your profit objective is 1.3 times to 1.7 times max that you can go. If you go outside of this range, right? If you're going outside this range, the consistency you have to hit is going to be really. You're going to be one of these traders who just doesn't have a losing day, right? And unless you're that type of trader, and if you are that type of trader, again, the idea is we don't know, right? You don't know necessarily what days you're going to win or lose. You can't force a win, and so if you're at this 1.5, okay, and you only manage to hit a 60% winning days, then you're break even. You didn't lose anything on the month. And if you're on a month where your consistency is pretty here or there, you're probably going to be losing a little bit, making a little bit. You're not going to lose a lot or make a lot, which is not so bad. If you're at 70, and when you do hit a 70% or an 80% win ratio, you're making really good money. Versus with the 2 times, if you're at 2 times, when your ratio drops off, you're losing quite a bit. And even when you do have a good win ratio of say 0.7, you're not making very much. $600 in a month with a 70% win ratio. So 2 times is too much. That's in my opinion. 2 times is too much. Assuming this is mathematical. Obviously, this is hypothetical, but 1.3 is if you're, what I would say is this: if your consistency is not quite there, probably 1.3, 1.4 is going to be better. If you're really super consistent and you really got your methods down, then you could go 1.7 if and you could. That would be the other implication. But the nice thing about 1.4 is you're making really good money if you're consistent. And if you're not consistent, even at 60%, even if you're about equal in your win-loss days, you're still putting up a little bit. So that's how I'm taking this. Is that basically your losing day? Of course, this is average. So you could say, well, that's not my average typical day. I don't trade to hit my loss limit. But if you're going to trade, let's just say it this way: if you're going to trade until you hit your loss limit or until you hit your profit target, and is there almost any possibility of you hitting that loss limit on the day? That's if it's not like 80-90% that you can hit that profit target, then you won't. This seems to be the optimal range for your daily loss limit in relation to your profit objective. Somewhere between this 1.3, 1.7, depending on exactly how much risk you need, right? 1.5 is probably the medium ground, so that's about where it needs to be. You bump it to 2.0 to 2, if you dump it to $600, it makes a big impact. So I'm going to say around 1.5 because that does give you $450 of risk. You're only trying to hit 300, so I think that makes sense. I decided to save the second part for another video, so that's all for now.